Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Markets closing off the lows of the day as the latest labor data paints a weaker picture on the economy. We've got a closer look at the jobs report and the takeaways from the trading day. And one of the standouts in today's trade, that would be Tesla. That stock extending its recent rally, closing at a new all-time high here. Going to hear from one of the biggest bulls on Wall Street. That would be Wedbush's Dan Ives on why he's so optimistic about Elon Musk's vision for the electric vehicle maker. Well, the November jobs report showing payrolls rising by 64,000, higher than the estimate of 50,000. Still, the unemployment rate did tick up for a fourth straight month to 4.6%, pointing to some underlying weakness in the labor market. Joining me now is Nicole Bachaud, ZipRecruiter labor economist. Nicole, it is good to see you. So we did get that important jobs data today, Nicole. In terms of what's ahead here, you say employers are preparing for growth, not survival. That sounds relatively positive. What signs, what signals, Nicole, indicate that to you?
So the current data that we got for November shows that there is still a good degree of stagnation happening in the labor market. There is pent-up demand to hire, we know from our recent employer reports at ZipRecruiter, but that hasn't been able to translate into actual hiring growth due to a lot of the policy headwinds that businesses are facing with tariffs, inflation, and geopolitical tensions.
Do you see that kind of picking up, though, in 2026, Nicole? Gradual improvement there?
2026 is absolutely going to be defined by gradual pickup in demand for employment. We're not going to see the market snapping back or having any sort of explosive growth. It'll be slow and steady winning the race as we get into 2026.
When you look for that gradual improvement, Nicole, I'm just curious, are there certain industries, certain verticals where you would expect to see that improvement?
Healthcare has remained the backbone of the labor market for all of 2025, and that's absolutely going to carry into 2026, as will skilled trades. This morning, we saw construction showing positive gains in employment as well. Both of those industries are really going to be booming in 2026 and beyond, given the demographic setup of the U.S. population, which is aging, and we're seeing older folks stay in their homes longer, leading to more construction and more demand for healthcare in the coming years.
Another trend you call out, I thought this was interesting, fewer degree requirements. What's going on there, Nicole? What explains that trend?
As the U.S. workforce is restructuring and aging, we're seeing a lot of new entrants, younger folks in the workforce who are bucking the trend of pursuing a four-year college degree. And as we have fewer workers who have the formal education training, we're seeing more folks with more diversified backgrounds entering the labor market. As such, businesses are adapting to these changes in workforce demands and are looking at things like skills-based hiring as opposed to checking the traditional box of college degree, yes or no.
You also talk here about flexibility emerging as a big differentiator for job seekers. What do we mean by that? Flexibility, Nicole? Is that location? Is that schedule?
It's a bit of both. After the pandemic, we saw a lot of workers demanding remote work and remote work flexibility. As that's loosened up and most sectors have really returned to some sort of hybrid or in-office environment, we're seeing workers are not willing to let up their schedule and location flexibility to have a little bit more say in how their career looks and how their day-to-day life is able to intersect with their job. And that's a big demand point from a lot of the surveys we've seen with job seekers and new hires recently.
You note here a spike in re-entrants you call out, so that's people coming back into the labor force. What explains that? And is that a positive sign for the labor market and the economy, Nicole?
So it's a bit of a mixed bag. We're seeing the overall labor force shrinking due to an aging population and a reduction in net immigration. And that's going to create a tighter labor market moving forward, even though that seems far off given the slowdown in labor demand that we're seeing right now. The rise in new entrants is driven partially by the necessity for more workers in the workforce, but also we're seeing a lot of people coming back to the workforce due to economic reasons, economic hardships, and just overall increasing costs that are driving folks out of back into the labor force.
Nicole, we got to talk about AI. You know that. There's concern about its impact on the labor market. You say here, though, scant evidence, you point out, that AI is impacting the labor market at this point. What's your bet, Nicole, that in fact AI won't trigger sort of mass displacement, or is it too soon to say?
Right now, what we're seeing in as far as AI's impact on labor is a restructuring of how certain jobs are done and the tools and resources that workers have access to enable them to work faster or be more productive in certain roles. That's more where we're going to see the bigger impacts in the near term versus a larger restructuring of where jobs are located. We're seeing now the what is being done within jobs is really where AI is having the biggest impact.
Yeah, so if the bet is AI doesn't replace workers, but it does impact how many of us do our jobs, Nicole, I'm just curious, as a labor economist, how you think through that. Are there certain industries that are more vulnerable? Do you think, well, there's certain skill sets people need to train up on if they want to stay competitive in the future?
Absolutely. Upskilling and learning how to adapt to new technology is going to be vital for workers who are looking at a challenging workforce right now where hires are down and unemployment is rising. Being able to upskill and up-level is going to be really important and could be a key differentiator for those who are able to find the jobs and those who are not. What industries are going to be most impacted? You know, I mentioned earlier that healthcare and construction are going to be two sectors where we see a lot of demand. Manual labor and frontline labor, like in those industries, is not going to be impacted by AI in the same way that we see in business and professional services and other industries that are, our typical office roles. That's where we're going to see a lot more kind of dynamic shifts in how work is accomplished.
Nicole, great to have you on the show today. Thank you.
Thanks, Josh.
Stick around. Much more Ask for a Trend still to come. U.S. stocks diverging on Tuesday with the tech-heavy Nasdaq composite climbing as the S&P 500 and the Dow slumping. Here with the trading day takeaways, Yahoo Finance's Jared Blikre. Jared.
Thank you. So let's talk about the safety trade, which was kind of in effect today, and I'm going to explain exactly what I mean here. So we did have a risk-off day, and it was kind of the mirror of yesterday. As I've been saying, the Dow was leading yesterday, and we had the Nasdaq in the red. Today, the Nasdaq was in the green and leading, and the Dow was in the red. But look at the top three sectors here: XLK, XLY, XLC. Tech, consumer discretionary, and communication services. That's where you see those mega cap names. And by the way, we're going to get to energy in a second. That's a standout. That's trading 3% to the downside today. But here's the Nasdaq 100 where you can see all this nice green in the mega caps. Obviously, Alphabet is an exception. But Tesla, I kind of buried the lead here. And Tesla managed to eke out its first record closing high of 2025. So you can see it's finally up about 21% there. Off of the bottom in March there, it's now up 120%. So it's more than doubled its share price. And I've been tracking Tesla over the last week because it's been in this giant cup and handle formation. And now it's broken to the upside a little bit earlier than I expected. But nevertheless, given that long base there, I think we're going to see some more upside from Tesla. But we do want to see about 475 hold. A lot of times there's a back test, but you don't want it to go back under because then that's a false breakout. Also want to mention, I got to talk to Caleb Silver recently, and this is a Stocks in Translation episode that you can download. He is the editor-in-chief of Investopedia. We talked about some of the top terms, but he gave us his overview of the trading that we're seeing right now, including some of the rotation that I'm talking about. Let's take a listen.
We're almost at record highs in a bunch of different places. And you look at some of the factors and the sectors that are rallying right now, you have Dow theory in effect right now.
Yes.
Transports catching up with the Dow Jones Industrials. That is a sign of a really robust market. Just last week, we had, I think, something over like 35 stocks hitting new 52-week highs. And it wasn't the big tech stocks and the AI stocks. It was across industries. You had insurance, you had banking, you had Walmart hitting a 52-week high. So the fact that you're seeing this broad-based rally, the sector rotation, which is the lifeblood of the market. That's super healthy right now.
Yeah.
And investors, you got to be entertained. It's been a pretty good year. Despite all the noise, it's been a pretty good 3 years since this bull market started running in November of 2022.
I am entertained. I don't know about you.
Oh, you got to be. Come on.
We got to move on, though.
Small caps.
Yes,
Now, I had a
yes.
strategist on the show today, positive on the economy next year, more cuts on the way, like the pint-sized names.
Yeah, I'm just worried we might be in for a little bit of a fake out. And this is kind of an update on what we were talking about yesterday, because I was saying that they were kind of at the Rubicon yesterday. Well, they're still in limbo. So let's check out a chart to see exactly what I'm talking about here. This is a Russell 2000 going back 2 months. Let's make that a 3-month chart. And then we can see, all right, these are some of the prior resistance levels we're dealing with, broke out to fresh record highs. Now we are backfilling and testing those prior highs. That is okay, but what you don't want to do is see the Russell then sink down and start using those prior high lines as resistance. I'm going to show you the 5-year chart one more time because we have been here several times. This breakout here, that was a false breakout. That got investors really excited. We had another one in here, and is this another one, another false breakout? We're going to see. But I will say this is a time of year through February when small caps tend to shine. So there are some tailwinds working in favor of the small caps.
What about the energy trade? Because crude's making headlines.
Yes, so let's get to that. Crude just had its worst day in several months. And this is after I was talking up the energy sector yesterday. And obviously energy had a pretty bad day today. But I was just thinking, I'm thinking long term into the next year. So crude oil, I don't think it's, it broke some really fresh lows, some long-standing lows here. Let's check out the 5-year on crude oil. There we go. We haven't seen these prices since like 2021. Might not be done, but the energy sector, I'm going to bring up my max chart to the beginning of the century. I like the prospects of this flag here. I think next year we break out to the upside. So what we're seeing today, probably noise, but be careful when you time your entries.
Final question on metals, just quickly. Curious what you take.
We got time for that. Yeah, platinum and palladium have been on my radar, although I haven't been talking about them much. But we saw some real upside action in platinum. Let's take a look at that trade. Here's the year to date. Just really breaking to the upside there. So nice work for platinum. Gold not doing much today, but the metals, there's a game of catch up. And I think platinum and palladium are just catching up to gold and silver now.
All right, thank you, buddy. Appreciate it. Stick around. Much more Ask for a Trend still to come. Tesla notching a new record following confirmation that robo-taxi tests without a driver are underway in Austin. Tech analyst Dan Ives sat down with Yahoo Finance's Julie Hyman on Market Catalyst, speaking on Tesla's ambitions and how far it could grow.
If you're owning it for numbers and for the car business, I think that's the wrong reason. In my
but it has to fund the other stuff, right? And it's funding it in part through selling cars. So it has to sell enough cars in order to not just make a profit, but also to fund some of these ambitions, right?
I look at it almost like a bracket, like in other words, like a worst case, base case, best case. As long as it's sort of above a worst case, and I think now it is in terms of deliveries, then the business model continues to play out, and that ultimately does fund what I really view as the key piece, right, which is autonomous and robotics future. Look, in terms of, if you started this year, and I told you where numbers was going to be at the end of the year, you're like, where's the stock going to be based on those numbers? You'd be like, it's $200, $250.
Right.
But it speaks to my view, you've talked about a lot, is that when you look at physical AI plays, there's NVIDIA and Tesla's, I think the two best out there. And now it's about proving it out. But that, as an investor right now, if you're bullish on Tesla, you're not focused on consensus 26.
Of course.
But to your point, I do think deliveries has stabilized. I think China's actually shown growth. And you look at the last few quarters, it's actually better than expected.
I'm curious, because you said you have worst case, base case, best case. What's your worst case scenario for Tesla?
Well, I think worst case, if you go back like 6 months ago, we were...
That felt like worst case, yeah.
It felt like worst case because also given deliveries, given a lot of the brand issues, given what you saw in Europe, and obviously, tax credits coming off in terms of the US. So we were trending toward a worst case. And look, it spoke to my view where Musk need to be wartime CEO, focused on this core Tesla chapter, which I view as probably the most important chapter ever for Tesla and for Musk. So I think you now are seeing a different Elon. You're seeing a different company. And look, Julie, I think we sit here a year from now, the stock's at 650, 700, or it's lower than here. In other words, like this is a very
like a make or break year.
I'd call it a make or break year, and I think it's going to be make relative to autonomous 30 cities, showing the volume production, not just delaying it. I think that's why it's such an important year.
Okay, so you mentioned a couple of the goals there. Like, give me the top 3 things that it needs to do this year to push it higher rather than going
Well,
lower.
one, I mean, you need to be in 30 cities. I mean, when you look at Austin and now what we're seeing in California and some other cities, you need to be in 30 cities by summer.
With the robotaxis.
With robotaxi. So that's one. 2, no safety driver. Now you're starting to see that now in Austin. We saw it firsthand. You need to see the geofence area expand to a point where I believe it gets significantly more than where Waymo is, right? You know, relative to even having a huge head start. And I think the third, it's volume production. In other words, like you actually need to show volume production of cyber cabs coming out of Gigafactory in Austin. Look, I think those are the 3 that are extremely important to show. Okay, is the whole story going to take hold this year? No. But it shows that like those are huge building blocks to what I view as kind of the future of Tesla.
And it's interesting that you say that because like Musk has always been good at vision and big pronouncements, but what you're talking about is execution. And there his record has been less even or at least less consistent on time, right? He's had a lot of delays in the past. So you're confident, though, that you think he can hit those goals?
Look, it's just like SpaceX. I mean, you're trying to solve the most complex AI, I'd say like some of the biggest problems out there. And when you do get to full autonomous, you're dealing with lives, you can't just be 99%. I mean, so you're talking about the margin of error you almost can't even, look at in a spreadsheet. So this is something where it's so important that they do this from a safety perspective and continue to stretch it out step by step. But look, I mean, I think autonomous alone is worth $1 trillion. And I think when you look at robotic, you look at Optimus, you look at this all playing out, that's how I get to, in a bull case, a $3 trillion valuation, at the end of 26.
Okay, I'm curious about something. I know that they've put Grok in some of the Teslas, right, which is the XAI LLM. Have you been in one of them that has Grok? Like, how do you even, do you talk to it while you're driving? What do you do with it?
Yeah, it's interacting with it, and I think that's something.
You just need somebody to chat with? You chat with your Grok in the car? What do you do with it?
But to some extent, it speaks to that's going to expand, because the whole view is that this is all part of the Musk ecosystem. I mean, Tesla is going to own, I think, a decent-sized piece of XAI. You'll get SpaceX that's going to go public next year, and I think it's possible Tesla will also have ownership, or at least a piece of SpaceX. And then you look at Grok and you look at everything that's happened here. I mean, I think eventually what this is all going to, there's going to be some holding structure that you're probably as a public entity in terms of Tesla, XAI, whatever they own of SpaceX and some other things. But look, I think this is sort of the vision for Elon. He recognizes in this arms race with Altman, with Jensen, with Nadella, with what we see Carp Palantir and everything else, this is the time. This is not a time to watch from the sideline.
Yeah. Okay. I was just talking to Mohammed about how he uses. Thank you. How he uses these large language models. Which ones I'm curious. Are you a ChatGPT guy? Are you a Grok guy? And how are you using it?
ChatGPT, also Gemini. Use a little Grok and Perplexity. So I use it for different things. I think each has its strength. Look, I use it every day in terms of organization, content. It's one where solving different problems, like my travel. I mean, so depending on different ways, I use them, but it's something where this is just the beginning, because you think about autonomous, most consumers, the models are just the beginning. It's going to be robotics. It's going to be, when you look at autonomous, it's going to be what ultimately will be Apple having a true AI store in terms of apps. And I think that's where everything's heading.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet.